Okay, peeps, welcome back. So today we're going to be going over Bitcoin and the Bitcoin miners. I believe we have 6 or 7 in total. And how the halving's here. It's time to start loading up on altcoins. So with that being said, let's get it. So of course, that's not financial advice. You guys don't have to buy altcoins. You don't have to buy anything in crypto. That is your choice. How you choose to see this market and go about your business is entirely up to you. So let's get into the Bitcoin metrics. Before I start that, for those of you guys that are new to crypto, there are two, I don't know exactly what these things are called. They're like indexing sites that indexes the price action 24/7 of the entire crypto market. So you can literally look up any crypto, Bitcoin, Ethereum, any of the thousands of altcoins at any time of day, 24/7, whenever you need it for your convenience. That is CoinMarketCap and CoinGecko, as you guys can see here. I will leave this in the description for you below. So these are actually more than just sites to be able to track your coins. You can also look at the different crypto exchanges and what tokens they have, and hopefully that part's up to date. I'm not sure about that one. You can look at derivatives, derivative options, not like actual options that you can look up to trade. DeFi exchanges. You can also look up different categories like AI, layer ones, DPIN, stuff like that. See all the different projects in the different categories. And that will allow you to track the price of native cryptocurrencies whenever you want. Obviously, the Bitcoin miners and the Grayscale trusts, you can only track them live in terms of price action Monday through Friday, but you can do that from your own account. Take a look at the prices on your portfolio on whatever platform you use, Fidelity, BlackRock, Webull, whatever. Okay. So let's go ahead and get into the major indicators here. So give it a second to load. As you guys can see, crypto. This is basically for all cryptos, not just Bitcoin. You can see that the indicator is still very low. What does this tell us? It basically means that retail is not here yet. Not like really here, like seriously en masse. So those of us that are getting in right now are still getting in early according to this metric. I'm actually going to take this a step further, and we're going to type in how to buy crypto. And you guys can see this is on the 5-year time frame. Again, Bitcoin and Bitcoin cycles, crypto cycles generally operate on 4-year time frames. So you're only going to see these spikes maybe 1 or 2 times throughout that time frame. Again, it's very, very low. Okay, we're at a 5 compared to this 50 or 100 back here during 2021. Indicating that retail has not yet stepped into the space. Part of the reason being is because the Fed funds rate is at all-time highs. Most people are broke. They don't have any money. They're spending money off their credit cards to pay their bills for basic essentials like groceries and stuff like that. So when the Fed does cut rates, which I believe is going to come sometime probably around the end of Q4, end of Q3, start of Q4 of this year, I'm pretty confident in that. We'll see the rates come down, borrowing costs will come down, and of course, most consumers will go out there and do what they usually do and spend themselves broke on cheap money. So anyways, Bitcoin here, as you guys can see, we're a little bit higher on this one, but not quite as high as these previous peaks, which indicates that the move for the retail space moving into Bitcoin is moving up, but it's still early according to that metric. And again, if we go how to buy Bitcoin, you guys can see here that still very low, very, very low. So an 8 compared to like this thing back here where it's like a 70 or 80, and then back here, and then all the way back here. You guys got to understand the mentality of people these days. They're like snap of a finger, like 1 second they're into something, and that next second they're like, oh yeah, whatever, stare at their phones all day and do nothing with their time. That's the kind of mentality these people have. So, the amount of attention span that they give to anything at any given point in time is about the equivalent to people that retail traders that invest in crypto. So keep that in mind when investing in any of these cryptocurrencies. So fear and greed, we moved from a 66 to a 72. So a little bit higher, but again, the Bitcoin halving has happened. So we're entering the most parabolic phase of the bull run. There's usually 3 phases that this thing goes in. When the bear market bottom gets hit, we enter into the slowly phase, and then gradually, and then suddenly. 2022 to early 2023 was slowly. basically all of 2023 to early this year was, or I should say towards about Q3 of last year, was the gradually phase. And we're kind of somewhere between gradually and suddenly, okay? Which means that basically that in terms of the parabolic curve, we're going to get into the most parabolic phase roughly within the next 6 to 12 months. So now is the time to strike. I mean, you got to have that eagle vision. You got to see your target from 5 miles away and understand what you're looking at, how you're going to go about striking, and, have a game plan in place to essentially guarantee the highest probability of success here. So the MVRV score, as you guys can see, were roughly about a 2. This thing topped out was about a 6, 8, and a 10 respectively on the previous cycle tops, as you guys can see here. Well, with the exception of November 2021, that was a 4. That was kind of a bit of an anomaly, but when we were trading this back then, we already knew that that was not the bottom, and we can show you guys that on the chart here in a minute. I should say that the bottom in June of 2021 was not the actual true bottom, and the peak in May of that year was not the true top. So again, Bitcoin rainbow chart, this thing is pretty self-explanatory. Even though the price of Bitcoin is at basically essentially 70,000 right now, it is still within the buy territory, as you guys can see here. So according to this metric, Bitcoin is still very cheap. It could get all the way up to 800, 900,000, maybe even 1 million by the end of the cycle, assuming that the crypto bull run stops pretty much by the end of next year. Do I think it's going to get to 1 million? No. I'd see Bitcoin getting somewhere between 150 to 250,000. One thing you guys got to understand about the media is generally they'll try to sell you this narrative of like, oh yeah, Bitcoin's going to $1 trillion per Bitcoin, and they just give you these outlandish targets. And could it happen? Absolutely. I mean, the spot Bitcoin ETFs for Bitcoin are a major success, the best in history. I mean, it literally made history. I mean, and what we saw with gold, when the first spot gold ETF was approved, the price of gold basically just went straight up for the next 7 years. So am I saying it's impossible? No. Am I saying it's likely? No. Is it possible? Yes. Is it likely going to happen by the end of next year? Probably not. So again, the Bitcoin halving just happened on 4/20. Of course, the memes in crypto never seem to end. So that was actually just yesterday, as a matter of fact. So basically, based on our experience in the crypto markets, pretty much the most opportune times to buy altcoins, not talking about Bitcoin, okay, or Ethereum. We're just talking about altcoins. Anything besides Bitcoin and Ethereum here, which is going to give, generally speaking, high risk, high reward. There's a greater risk of, losing 90% of your investment, but there is also a greater risk of making a 10, 20, 30, 50x. The best time to pick up altcoins is, generally speaking, 6 months before the halving to the date of the halving is generally the cheapest times that you're going to get altcoins. So pretty much from 6 months ago until now, best opportunities in terms of anything besides Bitcoin and Ethereum. So, and I'm actually going to show you guys that on the chart myself here in a minute. So Nupal, the Nupal and the Pi cycle top indicator is specifically for Bitcoin. They're not for altcoins and ETH. So according to this, Bitcoin is a little bit overextended. I would agree. I think, maybe a little bit of down, up, sideways chop like we saw in the previous cycles. We've gone over this in the previous video. Generally, after every single halving, Bitcoin will have like maybe a couple ticks up and mostly chop sideways for 6 months. If we just did that, this indicator would come back down to neutral and or undervalued, in my opinion. So as of right now, we're a little overheated according to the Nupal. So Pi cycle top indicator, again, the signal usually strikes when the two lines cross each other. We do not have that right now. So the 111-day moving average is at 55,000, and the 350-day moving average times 2 is at 77,000. But just understand one important thing here. Nearly every single time that we test the green MA, we usually get rejected off of it, retrace, and or chop sideways. But once we do end up breaking the green MA, it's usually just straight up after that. That's when we get the most bullish move on Bitcoin. So we will keep a lookout for that with you guys. So let's get rid of these, and we will go ahead and start getting into Bitcoin and the Bitcoin miners now. So you guys are probably wondering, how exactly did we know that the June bottom in 2021 was not the true bottom. Well, there is a couple of different indicators that we use to measure this. So the first thing that indicated to us that this was not the true bottom is it did bottom out at 30K. So if we look from right to left here, you guys can see that's when it retested a support. This is what's known as a Wyckoff accumulation. Okay, for those of you guys that don't know what Wyckoff is, go look it up. This is Wyckoff distribution up here. Basically, when you get a retest of a certain zone and it does not break that zone, there is a higher likelihood it's going to go in the opposite direction. So the bears are trying to push this thing below 30K. They couldn't do it. And eventually they had to get stopped out. And then there was an epic short squeeze and the bulls came back in, took over the price, and then we went higher. So basically, in short, the reason we knew it wasn't going to go down 80% from this high up here is because it never broke 30K. Plus, there's a couple other things. So we also have this falling wedge, as you guys can see here. Once we got a bullish confirmation out of that, that indicated that we were not yet done with the bull market. And also this, I actually have to zoom in to show you guys this. So this golden cross here on the yellow and the blue EMA, that's the 8 and the 21. That also indicated to us that we were not yet done with the bull run. And this was not initially a rising wedge on this entire move, but it did serve as kind of a support line. So once again, another thing that we look for with the Bitcoin price. I'm not sure why it just did that. So as you guys can see, we didn't get a MACD death cross on the monthly till all the way over here in January of 2022, whereas we got one back here in the weekly time frame. So that was another indication we believed that the bull run was not yet over. Plus the price never broke this monthly trend line here, as you guys can see. Once it did, though, right here in December 2021, we said, okay, we're going to take our bags off the table. We're done. And then we just kind of sat around for 6 months and did not touch crypto at all. So getting back to the chart here, the next thing that told us that the bull run was over was not just the break of the monthly, but you can see this massive rising wedge here. Once we got a break out of that, that was pretty much a done deal. That between the break of the monthly trend line pretty much told us that the bull market was over. And of course, you know, the Fed back then, the talking heads of the Fed, they were like, oh yeah, we're going to raise rates in March, guys. So that was another major indication that there was probably going to be a sell-off. Okay. So in terms of Bitcoin, we're in the bull flag here. The measurement is basically from the start of the parabolic move from the previous breakout. That would have been this channel down here. So the flagpole measures from the top or the bottom of the breakout, top of the channel to basically the top of the current flag. We assume the breakout point here might be, you know, maybe a couple of weeks or something. I don't know if it's going to happen that fast. We're just taking an arbitrary number here and measuring it. So again, the target would be roughly about 93,000. Everything still looks bullish. We have not broken 59,000 with a red candle close, so that's good. We're not even close to the support line. That's also good. That's very bullish. And no death crosses on any of the indicators except the RSI. And I would say that's really not enough to convince me at this point that this thing is going to go lower. So, plus the price of Bitcoin doesn't usually have a massive drop right after the halving. It usually actually goes up a little bit and then just kind of sideways. So, with that being said, let's get into the miners. Oh, right. One more thing. So, so you see Bitcoin's at all-time highs here. So we're going to point out another cryptocurrency that we actually own. So you can see Bitcoin is past all-time highs or pretty close to it. Previous all-time highs, 69,000. It's currently at 65. So we're going to do a quick measurement here, and I'm going to reiterate my point. This is just one token. We'll go over native cryptos in a separate video. But this is just to reiterate my point that roughly about 6 months before the halving to the date or the week of the halving is generally the best time to get in on cheap altcoins. So current price is 643, as you guys can see on the right. So Filecoin, which is one we have a pretty heavy investment in, still down roughly about 97%. This thing has not moved at all, okay? Even if we take something that's really popular, let's say that one that everybody loves, like maybe Chainlink, for example. Everybody loves Chainlink. Pretty much everybody in the crypto space talks about it. This thing from all-time highs is still down 70%. We could take a look at another one of our favorites, which is actually Dogecoin. So again, Dogecoin still down about 80%. And even something like Litecoin, based on the LTC and trust, we'll take a look at that too. So Litecoin from pretty much from the wick peak up there, as you guys can see, to the current price, still down roughly about 78%. Now, if we take a look at Bitcoin, Bitcoin from its previous wick high up here to the current price is only down about 11%. Okay. So huge discrepancy between altcoins and Bitcoin. So if you guys wanted to get into altcoins now or the Grayscale Trust that are based on altcoins, I can't tell you guys what to do. It's your choice. It's your money. But now's the best time to do it based on what we've experienced in the last 4 years in this market. So let's now get into the miners. So we'll take a look at clsk first. This is a lot of people's favorite because it's the most environmentally friendly. I don't think that really matters in my opinion, as long as the network is secure. That's really what matters in my mind, but some people care about that kind of stuff. So, I can tell you guys that the earth has been around for billions of years. I don't think it's going anywhere just because, one Bitcoin miner company is not using clean energy, but that's just my opinion. So again, support on clsk 1220 to 1370, resistance $21 to about 2370. The wick high up here is about $25. We're still kind of bouncing around in this rising, broadening wedge, which is generally a bearish pattern. But the fact that it kind of bounced off the support makes me think it's not going to break down, and we are past the halving, so I don't think that this is actually going to be a broadening wedge. I think it might turn into something else. But from the current price to get back up to the previous levels, you'd be looking at 23% to 38% and then 43% respectively. If you wanted to wait for it to get back into the zone, you'd be looking at 65%, 82%, and 91% respectively. But do understand that we're past the halving, and there is no guarantee. In fact, I would argue that the probability is becoming lower and lower with each passing day that these things are going to retrace again, because simply the timing of the cycles. But how you guys want to go about allocating your capital, that's entirely up to you. So Mara, again, we are below this resistance, so there's a chance we could pull back into this trend line here. Again, don't be surprised if that happens. It may or may not, but this is a heavily traded zone right here where that trend line is, as you guys can see on the left. So death cross on the MACD, just kind of give you a general idea of how far this could come down. Probably, as of right now, roughly about 35%. So maybe DCA in and write some put options or something. Again, that's up to you guys. So support between $7 to $12.30. Do I think it's going to go down to $7? No. Again, this is a long-term trend line. It, generally speaking, has bounced pretty strong off of it. So that trend line's at 1050. The current support's at 1805, and then you have $20, and above that you're talking about 29 up to about $33. So if you wanted to wait to get down into the price at the trend line, you'd be looking at about 67 to 94%. To the higher levels, 170 to about 212%, and then 220% or so to get back up to that wick high. So Riot, this one is, again, within a very heavily traded zone. Previous resistance now turns support, and it's tested very strongly as support. Every time it's hit this level, it has, generally speaking, doubled in price. So something to keep in mind. It did break this trend line, but this is kind of a shorter term trend line, so I'm not giving too much weight to it. I'd give it a little bit more importance to the support zone. So that zone is currently between about 770 to 1020, and then resistance is 1850 to about, $21. So in my opinion, now is the golden opportunity to get into Riot at the possibly the best reward risk ratio you're going to get basically after the halving. Of course, that's just my opinion. Do your own research. So 103% to about 125% respectively is what you'd be looking at. If you wanted to make some extra money on top of your gains, you could throw some options on there for cash secured puts. At this point, if you did a cash secured put, there's a pretty strong chance you're not going to get assigned. If you did a covered call, or let's just say you bought the shares straight off the market, you don't want to do the cash secured put. You're like, screw that. I want the upsides. So You do the covered call, buy the 100 shares off the market, and then say, well, I'm going to put my strike for my covered call at $19. Maybe have it like be a month out or something like that. You can collect some options premium, and if it hits that price and you're comfortable getting your shares called away, then you just made roughly about a $10 per share profit. So 10 times 100 is about $1,000. So HUD 8, this is still within this falling wedge here. Hopefully this thing breaks bullish. If it does, the target is the top of the wedge, so about $23. Current support is 330 to about 880, and resistance is 1710 to about 2250. Do I think it's likely going to go down to the bottom of the support? No. Again, because it's within the wedge, but we also have some strong price action right around this level at about $6 or so. I don't think it's likely to go below that. It's been at that level for roughly about a year. So as of the current price, the move up to the previous resistance would be about 115% to 184% respectively. Pretty much just going to reiterate the same thing I said for Riot when it comes to options on this. So same thing with options on this one too, with btbt. Although this is not as heavily traded in the options world as HUD 8 is, but current support is roughly about $1.50 to $2, 420 to 480 on resistance, and then 520 at the wick top there. I don't think this is really likely going to come below this $2 level. It's just too heavily traded. There's too much price action during the fall of last year. I really honestly don't think it's going to come below that, or if it does, maybe like a wick or something like that. So again, to get to the top resistance, you're looking at about 107%, 137%, and then 158% respectively. Cipher, this is kind of a tough one on options. At this point, I probably would, if I had the shares, I would do a call. But I would probably put my call above. I'd probably put my call above this resistance right here, just in case it does break out. I can collect a little bit more profit on the move plus the premium, because if this thing's creating higher lows, as you guys can see here, and higher highs, which it does look like it's doing, there's a chance this thing could bust out of here and go to the next resistance. Not a guarantee, but how you guys want to go about that, that's up to you. So 215 to 265 current support, $5 to 555, and then 581 respectively on resistance. Just to give you the reward risk measurement here, so the maximum drawdown would be about 43%. Maximum move up would be roughly about as much as 53%. So it's pretty much a 50-50 in terms of risk. I'd be waiting for a further pullback to get into this one. I mean, btbt, HUD 8, and Riot are much less risky in my opinion. So the move up from support would be 109 to 131%, and then 143% respectively. So bitf, this one did have a break of this support here. Unfortunately, that does happen. So I suspect this trend line right here that goes back to December of 2022 is probably going to hold. So that I would say, likely it could bounce as low as $1.35. So if we look at the I can't even say it, risk metric here, you'd be looking at about 25% drops. So pretty big, but I mean, honestly, 25% drop in crypto for anything besides Bitcoin is really kind of like a baby retracement. I mean, that's nothing in crypto. Some of these altcoins can go down 20% in a single day or in an hour. Believe it or not, that does happen. So current resistance is going to be about $2 to $2.36. If it gets above that, we'll talk about the next levels. So as of right now, the move from the trend line to the resistance would be about 50% to 75%. And just so you all know, we are serious about getting heavy into crypto. We're going to start buying heavy into the Bitcoin miners and the Grayscale Trust tomorrow. We did actually buy some native crypto this morning and yesterday, even though generally speaking, we try to keep the allocation of capital extremely tight and disciplined, but we kind of went a little bit over to just make sure that we're getting our fill before the bull run happens. So we bought $50 worth of Ethereum and $50 worth of AIOC. We'll actually talk about these heavily in a separate video, but I'll just go over it real quick. So I do think Ethereum is going to run much higher than $4,800 a cycle. I don't know how high, probably like maybe maybe like 10,000, 15,000. If we get to 20,000, I'd say that's probably a more bullish estimate. It kind of depends on whether the spot Ether ETF gets approved or not, but as of right now, we're about 23% from the highs. And investing at these prices is below our cost basis, so it's a double win for us. And again, AIOZ is everybody knows what Ethereum is, but AIOZ is kind of a lower cap AI altcoin. So again, the AI narrative, very bullish. This is also a DPIN project. For those of you guys that don't know what it is, go look it up. So current drawdown, roughly about 31%. And again, this is below our cost basis. So we'll show you guys that this weekend. We're not going to get into our portfolios now, but anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.